The stock market is now down 21%.
43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the...
You're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
The Wall Street Journal says Facebook is hoping to raise $10 billion.
You see, many people assume that when the stock market is soaring, the economy must be booming too. It's like a reflex action. But here's the truth. The stock market and the economy are not joined at the hip. They're more like distant cousins at a family reunion. The stock market is a reflection of investor sentiment, corporate performance, and future expectations, while the economy is a broader measure of overall economic activity. So, what exactly is the stock market? At the heart of it all, the stock market is a vibrant marketplace brimming with opportunities. Imagine a young and ambitious entrepreneur named Emily, who dreams of opening her very own bakery. She envisions a cozy space filled with the aroma of freshly baked bread and the joy of sharing delicious treats with her community. However, Emily encounters a common challenge. She lacks the necessary capital to turn her dream into reality. Emily, determined to expand her bakery, made the bold decision to take her business public and offer shares in the stock market, opening doors to new investors and potential growth opportunities. Jack and John seized the opportunity and eagerly purchased shares in Emily's bakery, recognizing its potential for success and wanting to be part of its promising journey in the stock market. Emily used the capital from share sales to invest in her bakery, improving efficiency, expanding offerings, and attracting more customers. The next day, Jack met Robert in a park and sold his bakery shares for double the price. Robert knew that Emily was a skilled business owner, so he decided to buy the shares. These transactions occur on a global scale, with investors from different countries participating in buying and selling shares of various businesses. The stock market serves as a platform where people from all over the world can engage in these financial transactions, contributing to the global nature of the market. The origins of the modern stock market can be traced back to the late 1400s in Antwerp, which was a prominent centre of international trade during that time. It was here that merchants began to engage in buying and selling goods, with the anticipation of making a profit from the rising prices. Alongside the trading goods, there was also some activity in bond trading, adding another dimension to the evolving financial markets of the era. These early practices laid the groundwork for the development of formalized stock exchanges in the centuries that followed. In 1792, a group of merchants in New York City formed the Buttonwood Agreement, meeting daily under a buttonwood tree to buy and sell stocks and bonds. This practice eventually led to the establishment of the New York Stock Exchange, NYSE. The NYSE provided a centralized marketplace for trading securities, bringing stability and transparency to the stock market. It became a platform for businesses to raise capital and for investors to participate in company growth. Over time, the NYSE expanded its operations and became one of the world's largest stock exchanges. The Buttonwood Agreement and the NYSE's formation have had a lasting impact on the American financial system. Warren Buffett, one of the greatest investors of all time, has recently pledged a historic $50.7 billion to charitable foundations, including the Gates Foundation. But who is this remarkable individual, and what has driven his immense success? At the core of Buffett's investing philosophy is value investing. He meticulously analyzes fundamentals, seeking undervalued stocks with long-term growth potential. By focusing on intrinsic value rather than short-term market fluctuations, Buffett buys quality stocks at discounted prices and holds them for the long haul. His patience and discipline have allowed him to weather market volatility and capitalize on the true value of investments over time. For average investors, this approach emphasizes thorough research, a long-term mindset, and a focus on solid companies trading at reasonable prices. Buffett's tip for young investors is
consistently buy an S&P 500 low-cost index fund
keep buying it through thick and thin, and especially through thin.
To better understand the significance of the S&P 500, let's draw a comparison to a running machine. Just as a machine operates smoothly when all its components work together, the S&P 500 comprises 500 leading companies that drive the engine of the US economy. These companies, representing various sectors, contribute to the overall performance of the index. Like the synchronized movements of gears and levers in a well-functioning machine, the collective strength and stability of the S&P 500's constituent companies contribute to the index's overall performance. By investing in the S&P 500, individuals can align their portfolios with the growth potential of the US economy, just as one would trust in the reliability and productivity of a well-oiled machine. On the other hand, there were individuals like Milton Friedman who held a contrasting perspective on stocks and their role in the economy. As an influential economist and advocate of free market capitalism, Friedman offered a unique viewpoint that diverged from conventional wisdom. His ideas challenged traditional notions and provided a fresh lens through which to understand the dynamics of the stock market.
When you see around the globe the maldistribution of wealth, the desperate plight of millions of people in underdeveloped countries, when you see so few haves and so many have-nots, when you see the greed and the concentration of power within, did you ever have a moment of doubt about capitalism and whether greed's a good idea to run on?
Well, first of all, tell me, is there some society you know that doesn't run on greed? You think Russia doesn't run on greed? You think China doesn't run on greed? What is greed? Of course, none of us are greedy. It's only the other fellow who's greedy.
Gordon Gekko's "Greed is Good" speech in Wall Street presents a perspective that contrasts with Milton Friedman's economic views. While Gekko champions unchecked greed, Friedman emphasizes responsible self-interest within legal and ethical boundaries as essential for sustainable economic growth. Friedman's beliefs focus on the long-term value creation and societal benefits of self-interest, tempered by moral considerations.
The point is, ladies and gentlemen, that greed, for lack of a better word, is good. Greed is right. Greed works. Greed clarifies, cuts through, and captures the essence of the evolutionary spirit. Greed in all of its forms. Greed for life, for money, for love, knowledge, has marked the upward surge of mankind, and greed, you mark my words, will not only save Teldar Paper, but that other malfunctioning corporation called the USA.
As we come to the end of our exploration into the world of the stock market, it's important to remember that investing is a journey that requires ongoing learning, adaptability, and a long-term perspective. The stock market can be a powerful tool for wealth creation and financial growth, but it also comes with risks and uncertainties. It's crucial to approach it with a balanced mindset, taking into account our individual financial goals, risk tolerance, and time horizon. Whether you're a seasoned investor or just starting out, I encourage you to continue expanding your knowledge, seeking guidance from trusted sources, and staying attuned to market trends. Remember that successful investing requires discipline, patience, and a commitment to your long-term financial well-being. So, as you navigate the stock market and make investment decisions, may you find confidence in your choices, learn from both successes and setbacks, and embrace the excitement and challenges that come with participating in this dynamic world of finance. Thank you for joining us on this journey, and best of luck as you embark on your own personal financial journey.